We are tracking shares of Tesla right now, which are really in the eye of the storm of the tech sell-off, missing results for a fourth quarter in a row, failing to live up to expectations. Tesla also postponing the unveiling of its robotaxis. Joining me now is Tom Narayan, lead global auto equity analyst at RBC Capital Markets. Tom, thanks so much for joining me. I guess, do we have to put the sell-off in perspective because the stock had really run up massively into the quarter? Is that putting some downward pressure here?
I think it's a combination of things. First, you're absolutely right. It was up 20% in less than a month. It's over 100 billion of market cap when you really think about it. It's pulled back now, but it's not back to, nearly where it was before that run. There's definitely a factor. That said, there are definitely some things from yesterday's results that are definitely concerning. The automotive gross profit margin ex reg credits that were really high. If you exclude those, we're a lot lower than what people are expecting. Clearly, there was some discounting to sell those cars. That delivery number was really high, and that's what pushed the stock higher. We're finding out, I think it came from discounting, which of course hurts margins and shows you there's underlying issues with the car demand. We also got some commentary on Robotaxi that I don't know if folks really got excited about. It was very high level. Some conversations about regulatory that maybe didn't pacify investors. All that said, though, we're still constructive longer term, but we do think it's probably going to be challenged near term.
Okay, I'm going to ask about that, but I'm curious why investors are surprised that margins are challenged when all we've been talking about is they've been cutting prices.
Yeah, you're right, and they surprised me too. A 14.6% is pretty low. The consensus was 16. These guys usually do 17 to 18%.
But compared to the other automakers, like the space that they have versus the others.
That's absolutely right. You got to give them credit. But it's also a $700 billion market cap. Other automakers are like, sub 100, right? So they kind of have they're kind of priced to perfection to some extent where they really have to, that's already priced in that strength on margin. But you're absolutely right. At the end of the day, it's not a car company. Elon said it yesterday on the conference call. If you're buying it for the car business, I don't want you to have the stock or something like that. It's really about autonomy. I get it. But I do think it's important for them to sell cars, because if you sell the cars, you can put the FSD on it. That's part of the FSD, the autonomy thesis. So that's why I do think people think it's important to sell the cars, and why I think it could be a little challenged near term.
FSD, the fully self-driving. I always think it's a little bit dangerous, Tom, to talk about what Tesla could be. Why not just look at this as a car company? Because that's what they're actually doing. And to your point about those robo-taxis, they just keep moving the goalposts on that.
Yeah, it's tough to tell what's happening, but maybe behind the scenes. I know there's been a lot of labor turnover there. Some investors said that maybe that's playing into why that event maybe got delayed into October instead of August. But I do think it's important to note, is why I still have an outperform on the stock, which is Robotaxi is going to be one of the most consequential events to happen in our society. The auto industry is like a $3 trillion industry. It could make it a $5 trillion industry. I can share math with you that could easily get there, maybe even more. And all I'm saying is, from my math, I only have them capturing about $400 billion of value. So I think robotaxis are going to happen. And I think there'll be many players that capture this globally. But I think Tesla will be an important player. And the reason why I think so is their FSD software and tech is the best in class. And they're one of the few players who are actively pursuing it now. I think they have a good shot at being successful eventually there.
How should investors think about the post that Elon made on X about floating this idea of investing in XAI, that Tesla should invest in XAI? Is that meaningful? Is it something to be cautious about? I think the number he said is make a $5 billion investment.
I don't think that's how people invest in this stock. I think it's a narrative stock, right? It's you're dealing with really big orders of magnitude numbers. here. $5 billion investment. I don't know if that really matters when you're dealing with $700, $800 billion valuations. There are other issues that I think are more consequential for investors. Do they believe in autonomy? Do they think FSD take rates will go up? Robotaxis, do they think that's a reality? And do they think Tesla will have meaningful market share? That's really what moves the needle, I think.